Hey traders, welcome to Charts and Coffee. Hope everyone's having a great Friday morning. All right, so let's kick off what's been actually a really beautifully bullish week. And I hope since you've been tuning into Charts and Coffee, caffeinating and dominating, you know that we've been on the bullish track. We have a lot of questions in the mastery on some recent setups that we've been looking at in Visa, MasterCard, XLF, American Express, and why we're so bullish financials. It's tough to be a bear in the S&P when both technology, XLK, and financials, XLF, are moving higher. And I hope everyone's been seeing that because I've been getting a lot of questions about, hey, Rag, what about earnings season? Hey, Raghee, what about, I don't know. I got some questions on things like market breadth. Doesn't matter. Earnings, number one, are not a macroeconomic event, and market breadth is not measuring the market in any way that reflects the composition of what's happening under the hood in the S&P. Remember, most market internals, and it's not just that one, it's any of them. Most market internals look at all the stocks in the NYSE or the S&P as if they're equally weighted. Equal weighted views of the market are delusional views of the market because that's not how they're made, right? Imagine if we were all today after the close to bake cookies, maybe bake a cake because we're feeling, really wild. And we added equal amounts of all the ingredients. It would be inedible. That is what is happening when people look at equal weighted indices or these indicators that look at everything equally. That is not how the market works. We have disproportionate weighting. And you might say, Rog, but I heard otherwise. You know what? Let's let the chart remind us what's happening. We are at all-time highs again in the NASDAQ. And take a look. We've broken 5,000 on the S&P. There is nothing about new highs that's bearish, gang. And so please, 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 if it's been something you've been hearing me say for over a month now, and you're finally seeing why we've been bullish in the Sector Secrets Mastery for 14 months. We look at the bigger picture. We don't want to be bearish. We don't want to be picking tops. In fact, if you've been watching, you know we've been calibrating to what? We try to find where the strength is most clear. Technology, semiconductors, financials, even staples are having a minute. Probably the oddest, most boring trade we've got in the mastery right now is GE. Wasn't this stock at $20 not that long ago? But take a look at the trades we've been seeing here. Consistent green grab candles, consistent momentum and trend. We're focusing on buy the dip. Here's your Garanimals or paint by numbers formula. Green trend, gray zone, buy the dip. Right? That's how straightforward we want to make it. And that's the environment that we're in right now. As always, if you have any questions, let me know. We're about to embark on our Friday day trading and swing trading and ask me anything session. That's a regular in the mastery on Fridays. I will say right now, the swing trading that I'm doing with the members in the mastery is far outperforming day trading. Day trading's been pretty good, right? We're getting about 3 to 4 setups, maybe 2 to 3 setups a morning. And I think the last time I checked, we're at a 64% win rate, which is to think about and this is how I want everyone to think about win rates. For every 10 trades you put on, and I don't know what it is about sneezing in the morning. I have the window open here in the office. It's actually gorgeous outside, kind of cool here anyway at the moment. I know what it is about sneezing in Charts and Coffee this week. I think it's going to pass. All right. So if I have an overall, and I completely lost my train of thought. Not a clue where I was going with that. Golly, it's Friday, isn't it? But we've been talking about buy the dip. Oh, and so that's what I was talking about, the win rate. For every 10 trades you put on, ask yourselves, how many times are you going to lose out of that 10? And if you can't answer that, A, you're not going to have a good risk management approach. That's the thing. Think about working. For those of you that say, Rag, I have a hard time taking losses. This is a really great mental game you can play. For every 10 trades you put on, calibrate to, I'm going to lose 3 out of 4 of those. Once you do that, you just start to accept that losing is part of winning, and losing small is part of winning, and having a predetermined understanding of risk. As you start the day, start the month, start the quarter, start the year, you're going to have a better, easier time of saying, oh, these are one of the 3 or 4 losses that I'm going to have as I make my way to the 6 or 7 winners. In fact, you kind of love losses because you think to yourself, oh, let's get these losses out of the way, right? Let's get those 2, 3, 4 losses out of the way because the winners are around the corner probabilistically, right? And that's consistency in your trading. Everyone wants to be consistently profitable. And I don't mean that in any kind of exaggerated hyperbole, let's turn $1 into $1 million kind of way, right? I mean that in the most boring way possible. Think about risk. All right, I'll step off the soapbox now. PSA is over. Let's get to our questions. All right, first up, Alex asks, when futures day trading, do I pay attention to the 200 or is it not as important? Alex, I not only, and it's actually a 200 propulsion, which is a variation of what a 200 exponential moving average would be. I use a 200 propulsion because it combines 2 moving averages. So I love the classic moving average cross, but we've condensed it. Instead of having all the secret squiggles, all the moving averages traveling across the screen like spaghetti. I mean, I have enough spaghetti as it is, right? And I'm trying to cut down on pasta. So if we have the simplicity of the propulsion, those white dots are where the 200 are. I use them on every time frame, Alex. And that's something that is really another steady in what we do, which is, for the most part, it's the same philosophy: time, price, volume, volatility. It's the same setups that I'll use on a 5-minute chart to day trade as I will on a weekly chart to build the investment portfolio that we have been in the mastery for over 2 years now. We started in is it 2 years now? We started in mid 2022. So we're coming up on 2 years. And that portfolio is up really nicely based on the same stuff that we talk about: structure, support, directional bias, things of that nature. And oh, that reminds me, and it's blowing my mind because it's right around the corner. How many of you are free next Thursday? We're going to hang out. How many of you are free next Thursday? So I'm going to tell you straight up what this is, because I don't want anyone thinking, oh my gosh, Rag, what is it that, I'm feeling maybe a little overwhelmed right now by the market. So, and I've been getting a lot of that the last month, which breaks my heart because we're slaying it in the mastery right now because the markets are behaving in a way that is respecting the dovish pivot from the Federal Reserve. This is why we're at 5,000 on the S&P. This is why we're at all-time highs in the NASDAQ. Yeah. On Thursday at 8 o'clock, I'm going to talk to you all about what we're doing in the mastery. I'm going to share with you my trades viz from January, just 2024. What have we been doing? I'm going to share with you my trades viz, which is the accounting software for my trades that I use. I upload my statements and it spits out my results. And it's not just about P&L, which is great, but I want to get under the hood on what's happening in terms of profit and loss and the productivity. Think of it that way: the productivity of how I'm allocating my dollars and am I getting a decent return, right? Here comes that sneeze again. Oh, okay, under control. So I'm wondering what's outside blooming that's trying to kill me. I don't know. All right. So simplertrading.com/becoming-consistent. That is the mantra, right? Becoming consistent, account growth. This is for our trial. So before anybody goes, oh my gosh, Rag, what's the deal? It's for a trial. Who's got $7 handy? We're having a trial. We do this once a year. If that, we decided to do it again. We did it last year and we're doing it again this year. And so we're going to be talking about what I'm doing this year, what I'm doing in terms of indicators, structure. I'm trying to think what we're all going to talk about. The Trish boss is putting the slide deck together. And if any of you have been to a webinar that I've done, we are going to teach you what we're doing. I'm going to show you what I'm doing and why, right? We always have. I probably do a little too much teaching in webinars. I've been told that before, but I want everyone to feel that those 45 minutes, 50 minutes with me, that they can put to work the very next day. Even better, you can put it to work with me the very next day. We're kicking off the trial. This is not something that we do month after month after month. I do not do open trials because during this trial period, we're going to be walking you through what it is we're doing. We keep in mind very much that we're onboarding a lot of new members. So it's a very specific curated month where, yes, you're going to live trade with me, but we keep in mind in the background that, hey, a lot of folks are new. By the way, my existing members, you know I love you. Every time we have a trial, we always have goodies for you too. So you will find in the, hey, bot, it's already uploaded into the room drive, right? I think it's already uploaded into the room drive. Yes, we have a beefy hourly price movement range. So we have a 20 symbol HPMR with not just the indices, but a bunch of other goodies in that. So everyone's going to benefit from the trial. Even if you're an existing member, you're going to get some new toys to play with over the next month. So anyways, I want to make sure everyone has time. This is Thursday. Where's the date here? Where's the date on this? Thursday. It's Thursday, this Thursday. Is it not on the thing? Anyway, I need to remind myself that it's Thursday. So you're going to spend an evening with me and the Trish Boss Thursday, Feb 15 at 8 p.m. East Coast time. All right. Kind of close to my bedtime, but it's worth it. All right. So it's a $7 trial. I will tell you this. My mom used to always say this, and I believe this is true. Leave something better than you found it. I can't promise you you're going to make a bazillion dollars, but I can promise you, you are going to be a better trader after being with me and the bot and the boss and our members in the mastery. So anyway, I don't want you to miss this Thursday. And the trial is actually starting now, today. All right. So let's get to the questions as always. All right. Questions. Bear with me. How long is the trial, Kirby? It's a month. It's a whole month. It's an immersion. It's a whole month. Yes. All right. Questions here. So we talk about futures. Thank you, Alex, as always. Says follow up here is appreciate your honesty about market behavior predictions. Oh gosh, I can't tell you anything about tomorrow. I guess some people can. They can see into the future, right? I don't even know what I'm having for dinner tonight. I can't tell you what the markets are going to do, but we react to price action. We're counterpunchers, right? We look at the way the market's behaving. We counterpunch. If you don't like boxing, I love boxing. If you like baseball, the market is the pitcher on the mound, and we are the batter waiting for our pitch. And as Grandpa Buffett says, we play in a game where there are no strikes called. We can watch pitch after pitch after pitch sail by. There's no pressure to swing. In fact, the very best major league batters, the Hall of Famers, the Cooperstown destined batters, are the ones that are discerning about which pitch they swing at. We know this, right? Trading is the same way. Love it. All right. Intraday index HPMR seem to be getting steamrolled since 60 minutes. Thanks, Kapow. No, my friend. Remember the 60-minute indices. And remember the thing about the hourly price movement ranges on the 60, they're the same on the daily. No, not at all. So let me know what you're seeing, because we had Kapow. We expect the higher volatility. But then since then, no, absolutely. The DPMRs have been giving price a nice hug. No, doing great on that. So generally speaking, on those volatile days like FOMC or the day after, we can see a lot of volatility. But for the most part, no, the DPMRs and the HPMRs have been pretty darn good. We are going to be, however, updating the HPMR. So for those of you that are joining the mastery, you're getting fresh HPMRs, because they have to have the 6-month look back that we use to calibrate to what's happening now. And you might find, Alex, that little bit of tweak as we recalibrate and re-update. yeah, you'll probably find they're a little bit more, even better. So thanks for the observation. Check out the new update. I think you'll love it. And again, if you're getting the trial, you're getting the update. All right, can we look at Apple on a 1 hour? Hey there, editor. How are you? Yeah, Apple is an interesting character. And that's because it really hasn't been as strong as some of the other magnificents. It's not quite the downtrend mess that Tesla's been. It's not the uptrending awesomeness that, say, NVIDIA's been. You can see it's really range bound. So I would say my main issue, editor, with Apple is, I think the most important question we can ask sometimes, watch this building is a why question. Why is this on my radar? Right? Remember I said we'll talk about whys on Thursday when I see you all. A lot of watch list building is a why question, meaning why does this particular symbol deserve my attention? Why does this particular symbol end up above others in terms of places that I want to put money to work? And if I were to compare Apple to other XLK or NASDAQ names, it doesn't end up on the top. And if I were to compare some XLK names to XLF names, like being long American Express, we sent out an alert yesterday to get long Visa. It's going to lose out to a lot of financials. So I don't have a setup imminent on Apple, editor, but I want to talk about the why I don't, because there are other outperforming names. And if this is a concept, and I know, editor, you're a longtime viewer, but for other folks, if this is a new concept, what you trade is more important than how you trade it. Picking the names that have the best chance for follow through. I mean, when's the last time you thought about GE? I haven't thought about GE in a long time, right? And yet take a look at it. And right, it's easy to get caught up in the NVIDIAs of the world, but I don't know. GE is a very affordable, scalable name, right? Look at it. So it's easy to get caught up with what everyone else is looking at and talking about. But if we can calibrate to, hey, what's in a trend? And is it in a trend where it's getting sector, index, stock alignment? Yahtzee, right? We're going to get some nice follow through. Okay, next up is, do I see Johnson & Johnson as a potential swing trade? Ren, I don't. But in light of that, let me tell you what we are looking at. We have sent out alerts, XLV. So this is trade this, not that. How many know trade this, not that? We've been talking about that here in Charts and Coffee, and I've done videos over the past year plus about trade this, not that. What is that? Relative performance. Trade this, not that is, don't want to look at Johnson & Johnson, which has the better structure. So XLV will win out in a game of trade this, not that. Can I discuss the 6E? Euro is going to be that inverse relationship to the US dollar, Jay. I can't say that Euro has gotten my attention. It's trying to turn into a downtrend, and mostly because the dollar is going to be, the US dollar basket is going to be a little bit stronger because we're still waiting on the rate cuts. I would not be a dollar bull longer term or a euro bear longer term, but this goes back to the other question. Of all the things I could look at, why would I look at things that aren't, to your point, choppy? Why would I look at things that aren't clearer? And so I don't want to focus on things that are not behaving in a way that's leading to higher highs and really good follow through. So that one's a really good example of, yes, I am absolutely interested in what the euro and the copper market have to say, but it's not where my trades are going to map to. Does that make sense? So it makes sense to understand what's going on in bonds and gold and crude and copper. Agreed. But is that where my trades are going? No. So I'll look at those markets, those symbols, maybe once a week as more of a macro look. And then the rest of the time, I'm going right back to the GEs, American Expresses. Gang, we're long semiconductors, right? I'm going to go right back to those places that have swagger. What's swagger? Green momentum, green trend, green candles, right? Find the swagger in the market. That is where you're going to find that follow through. All right. And as far as will it play catch up? Probably, but I'm not worried about stocks that are not keeping up. I want stocks that are leaders, relative outperformers. Would this be a good time to buy Take Two? I don't know. Let's see. It's definitely a buy the dip stock. Yes, as of the close of the 6th, it's a buy the dip stock. Yes, Fernando, it absolutely is. Question here is IWM turned up. So that's Russell. It's always Russell futures. It turned up. So I can appreciate that look. It probably depends on what time frame you're looking at, right, Java? No, IWM and Russell, my friend, are in chop. I mean, no, I respectfully, I disagree. It's in chop, right? It's in chop. It's going to be still very much plagued by the heaviness of KRE. And oh gosh, nobody here thinks this leads, right? No one's looking at this as some important harbinger, right? Oh my gosh, then I failed you all. It doesn't. It's in chop. Take a look. Take a look. It's stuck still within the range. So on a 60-minute chart, maybe it's higher. On a 5-minute, it had a bullish session. But no, my friend, it's still very much stuck in a range. So until it starts to accelerate above, say, 2025, or accelerates below 1924, it's definitely in a range. And some days we're going to be heading towards the upper end of the range. Some days we're going to be heading down to the bottom of the range. But no, I don't. This is a very well-worn path. So no, there's no setup for me in the middle of the range at this moment. Now, if you want to play the 60-minute, keep an eye on, say, 1976 on the RTY, and that will map to calls on the IWM. All right, gang, just like that, man, that 20 minutes flies by. Thank you, as always, for being here for Charts and Coffee. Thank you for supporting this show and each other for, gosh, almost over 3 years. We've been doing this day in and day out. Thank you so much. This Thursday, we got a date, 8 p.m. Eastern, simplertrading.com, becoming consistent. What's it like to be the world's most boring trader? Sleep well at night and take advantage of the trends that we've been getting. Come check out what we've been doing. I'll show you my trades viz. Proofs in that, gang. Account growth. We're not going to talk about singling out greatest hits, although I could do that for an hour, but what's the account growth? That is all that matters. All right, gang, be good to each other. I'll talk with you soon.